All right, guys, now this is going to be chapter 6, part 2, um, video summary for you guys. So, as we left out, we were talking about the banking procedures, and now we're talking about yes and how it's easy, that the advantages and disadvantages of online banking. We also know that there's fraudulent practices out there as well, where there's phishing, fake emails that attempt to get information about you or your online banking customers, or the skimming of of credit card information. Um, Fake emails come in the form of telling you things like that you need to contact the IRS quickly because you've got a problem with your IRS account. The government will never send you an email. They will call you or they will send you a registered letter. Um, Skimming, of course, that's what happens when that it came out in the news not too long ago where there was skimming practices that was happening in the gas pumps, where they put a little device in, and then your credit card goes in as well, but then they gather the information for your credit card as far as um, not only the card number, but also any PIN numbers that you may have for your debit cards. So those things happen, which just happens because of, again, um, the technology that we use now. So the idea is to make sure that wherever you are, you keep your information safe, you keep your information um, uh, protected as well, so that not everybody can use it. If an ATM has unusual signage, don't use it. If your card is not returned to you after the transaction, uh, or after pressing cancel, then of course let your bank know that you need to go ahead and review some of the charges that are coming out to it, and check your statement. Check your statement. Keep your receipts so that you can remember whether or not you actually made that transaction, yes or no. The other thing also is that chapter talks about is the petty cash fund. Now, with petty cash, this is where you have a account, as it's stated, for day-to-day type of expenses. For example, having to go out and buy um, stamps if you need stamps, having to pay for a package if it's cash on delivery or COD. So small things like that. These are what are going to be later summarized, and it is also in your adjustments as well, and posted. And one person oversees the fund. Businesses do this sometimes to take money out of petty cash so you can have it instead of having to write a check, use your debit card, or go to the bank and get additional funds. So again, wanting to have petty cash. So setting it up, you set up the petty cash as an asset. Then, of course, you're going to go ahead and um, uh, you write a check and reducing the cash amount, so it's credit. So here, what it would look like on the general journal, you post to petty cash debit the actual money, cash, and then the establishment of petty cash um, is noted, but you also credit cash because that's where you're taking the funds out of. Um, Depending on whether you're debiting or crediting, it depends on what is the size of the fund. Let's say you start up wanting to have $50 there, but you start realizing that with the transactions that you're journalizing, that you see that you need to have more money in there because of all the transactions that are happening from the petty cash fund. But every single time something is taken out or money is paid, you need to have the invoice and a voucher to show that money went out and what you paid for. Um, the voucher contains, of course, the voucher number, the date, who the payment was made to, the amount of the payment, the reason for it, and the signature of the person approving, and the signature from somebody receiving it, to make sure that it's legit of what went in, what went out. If you get an invoice that you paid through petty cash, again, that's your receipt, but you have it there to show what actually happened. So the voucher example is this: the date, paid to Al's Cleaning for a cleaning package, amount $3, approved by John Sullivan, payment received by Al Smith, meaning that this person, Al Smith, received the money. And it's a debit account, this number, because that's what petty cash is. So again, it's making sure that the money is going out, who signed it, who approved it, and then who received the money. Again, you may have cleaning package, stamps, first day supplies, delivery, and again, postage stamps. So you would see what it is, and then of course you've got your general ledger for it, the description, the receipts, right? First establishing it. Then you have your payments of the petty cash record of all the money going out, making sure that, again, you're going to make sure that whatever you have as far as the payments, the 60 minus the 54, the money that went out, what do you have left over, what's going on. And then if you want to, you can start doing category of payments after the first time that you have your petty cash. So you can start posting to what you're going to be doing, so that it would be $15 for postage, and you'd put it into that expense. All things that you wanted to do. To replenish again, you go ahead and of course you take cash out, noticing the expenses. So here we go. You set it up, right? Here we are. So now what we're doing is we're saying, okay, the postage expense, the delivery expense, the cleaning expense, the miscellaneous expense. Now you're going to make a check for cash, taking the money out, to replenish. So you're debiting your expenses, you're crediting your cash, so you can put that amount of money back into petty cash to replenish it. Because remember, that's actual money that is in the office. If you want to have a change fund that you're going to provide change from, instead of using a cashier's box or that you want to use, you can have that as well. You also have to remember about being cash short or cash over. A shortage is considered a miscellaneous expense. An overage is considered other income. So let's say that you get money, you can't figure out why you're off, and if it's low enough to go ahead and not waste too much time on it, then you debit or credit cash short or cash over. You still record the fact that you're either less money or money that you need to have. So for example, in your sales, let's say shortages and overages, on December 5th, the pizza shop rang up sales of $560 for the day, but only had, here we go, $530 in cash. This is from the cash register. So they're off 30 cents. I mean, 30 cents, $30. So you would debit the 530. You would debit the shortage, and then you would still debit the sales for the entire $560, because you're still showing the miscellaneous expense. Now, what you do is you monitor that expense, the cash short or over, so that if it gets to the point that it's happening all the time, and you start looking at who's there, you start wondering what's going on. It helps you to investigate what the issue is. Not saying that it's because somebody's taking money from the till. It could be that somebody is inadvertently not knowing how to give change, or usually during that time it's a little too busy, so people aren't checking to make sure that they're giving out the correct change. Another example is, let's say that they had an overage. So you would do the same thing as a short, but instead you would go ahead and say miscellaneous income, because now they have a credit of $50. Okay, they were over, and this is the way you would record it as well. Now, if you're cash over or short and petty cash, it's the same thing. You got your supplies account, with the debits that you had, but then let's say that you're over $8 or under. Then you go ahead and you debit the cash short and over, debit for $8, and then again showing how much the money is actually there. Another one for petty cash. In the case of an overage, the cash short over would be credit as other income, just the way we did the example for the pizza. So this is basically the summary of the chapter: writing and depositing and endorsing checks. Then it's not just the writing of them, but the fact that you have to journalize them, put them in the ledger, and then of course do your complete accounting cycle, learning about petty cash, how to set it up, how to keep it going, how to reconcile your bank account, how to make sure that you're also taking care of a petty cash fund. So this is chapter 6 in a nutshell. Now, in the chapter, we're also going to be doing a demonstration of what you need to make sure that you understand. So I'll get that for you as well, and I'll see you on the flip side.